Good morning, everyone. I would like to call the meeting of the Audit Committee to order, please. Michelle, are there any public speakers?
Yes, Madam Chair, we have two public speakers today. The first one is Charlton D'Souza, followed by Jason Anthony. It looks like Charlton's not here to speak, so Jason Anthony.
Good afternoon, Audit Committee. Jason Anthony from Amazon Labor Union. I think it's time to focus on paying debt because in years to come, our money will be in the negative. And I think instead of spending money like we were Santa Claus, I think we should spend money wisely and having our money being audited. It should be something we should have done years ago because look at COVID. COVID changed everything. And now we're like, everything has changed forever. And to years to come, and now the MTA is in a fiscal cliff, and New Jersey Transit hasn't raised their fares in 5 years. So let's do something outside the box, shall we? I'll see you guys in finance.
Madam Chair, this concludes the public speakers.
Thank you. Next, we have the approval of the January 24th Audit Committee minutes. Any correction or changes? No?
So moved.
Okay, I'll make a motion to approve the minutes. Do I have a second? Thank you. All in favor? The minutes are approved. Michelle, are there any changes to the work plan?
No, Madam Chair, there are no changes to the work plan for this committee meeting.
Thank you. Now we have Jim McGovern, the MTA Acting Deputy Chief from the Controller's Office, who will brief the committee on management's review of the 2021 MTA Consolidated Financial Statements. This review includes changes in capital, net assets, other assets, and operating revenues and expenses. Jim? Thank you.
Is this on now? Yes. Good morning. So I'm just going to provide the committee with a brief high-level overview of the financial statements. The financial statements are still in process of, the finalization of being signed off and things with my colleagues next to me. But what I'm going to present to you today is a high-level summary of where we're at. Okay?
Thank you.
The financial statements, as presented, there's basically six levels and 5 statements. We have the MD&A, the basic financial statements, which is the statement of net position, the balance sheet, the statement of revenues, expenses, what we refer as the income statement, cash flows, the fiduciary net position, which is really our, at this moment, it's basically our pension plans, the balance sheet and income statement for our pension plans, and the notes to the financial statements, which our CFO looks forward to reading with us, the required supplementary information, and then there's the supplementary information for the fiduciary funds, and then there's additional supplementary information. So the whole report's about 135 pages of really a lot of information. This year, we implemented one GASB accounting standard, and that was GASB number 98, which is basically changing the terminology for the annual comprehensive financial report to a comprehensive annual financial report. And it was basically a labeling change. The prior terminology or acronym wasn't really a positive nomenclature, let's just say. So that was changed this year. What I did want to highlight for the committee is GASB 87, which is to be implemented this year in fiscal '22, regarding leases. Basically, I'll just read this quickly. This provides financial statement users with improved accounting and financial reporting for leases by governments. Under this statement, a lessee is required to recognize a lease liability and an intangible right to use lease asset. And a lessor is required to recognize a lease receivable and a deferred inflow of resources. So, in effect, rent for this building or rent for any building gets capitalized, and a long-term liability is put on the books and records of the firm. And as we sublease any of our spaces for our Grand Central, newsstands, et cetera, that receivable is put on the balance sheet as well, and a deferred revenue is recorded. We have about 5,000 leases. Most of them are really on the lessor side, but this is a big deal and a big effort, and it's in process. And we have a whole group of people working on it right now, including internal audit helping us, using Deloitte as our consultants for technical questions, and then a whole group of people who aren't here to support us. So this is I just want to highlight that to you.
Yeah. This was never done before?
Now, it's a brand-new pronouncement. The difference between the private sector, which implemented this a year or two ago, is the private sector only has to implement the lessee side, whereas the government accounting standards require both the lessee and the lessor. So we get to have the good fortune of doing both sides. But everyone who's implemented it has basically said it's not an easy lift. So I just want to give you the heads up on that one. Just going to the basic, this is not what you would see in the audit report. This is sort of a summarized view of the balance sheet. Things to look at, we have cash and investments of $14.4 billion, total assets of $103.8 billion, total deferred outflows and assets of $111.7 billion. Liabilities, total liabilities of $97.7 billion, with a total net position and liabilities of $111.7. And I'll get into a little more detail in the next slides on that. So this is just basically explaining some of the variances that we have year to year. Cash and investments increased $3.1 billion, primarily due to the issuance of a $4 billion grant anticipation notes at the end of December, the very end of December. The grant that was anticipated was the Carissa grant. Receivables increased $3.9 billion, primarily due to the, you're going to hear that word Carissa a lot today, I think, due to the increased receivable from recording the Carissa grant. We received about $600 million of the grant prior to 12/31, and the rest of the grant was received in January. So that's why the receivables increased so much. Capital assets, nothing really, earth-shattering on the capital assets, but the normal activity of increases and decreases during the year. And then total deferred outflows of resources increased $1.6 billion. There's a lot of ins and outs in this category here, mostly related to pensions and OPEB. But the big change was really due to the discount in the reduction in the discount rate to calculate the OPEB liability in the future. All right, and the discount rate went down 2.74 to 2.12. And that was really in accordance with the accounting principles that the actuary had to follow. Okay? I guess I'll stop there if there are any questions. Nope. On to the liability section. Long-term debt is $56.5 million. That increased $5 million, basically, as I previously said, due to the issuance of the grant anticipation notes, about $4 billion. The other post-employment benefits increased $3.2 billion, and that was about the other side of the applied discount rate, that liability increase that I spoke to previously on the deferred outflows. Net pension liability decrease, which might raise a flag or a question to you, right? And that's primarily due to the change in the calculation as the plan assets increased due to the past market appreciation, not the current market. The pension GASB creates a lot more volatility for us because we have to mark to market the plan assets every year, and there's a year lag in our date of measurement. So we benefited primarily on the NICERS plan from the appreciation that plan had, and again, it's a year lag in the measurement date. Whereas I think prospectively we may not see such a benefit going forward. Liabilities for injury claims increased. I think primarily this was the bus and subways, people not holding on. If I recall correctly, Pat Warren sent out a message for people to start holding on as they were falling. And then deferred inflows increased $2.1 million. And this is the difference between the projected and actual earnings on the NICERS plan I spoke about previously. This year, I kind of added a couple of charts, just to kind of give a little scale of the entities. So if you look at the first one about assets and deferred outflows of resources, you'll see New York City Transit is about half the size of the company. And if you kind of took at headquarters at the 27,066, bear in mind headquarters has all the investments on its books and records. So it kind of provides you a little bit of scale of how large transit is relative to some of the other entities we have. And even on the MTA HQ, one of the big investments that they have currently is the East Side Access entity, which is in progress. And we'll get to that in the next slide. I'll bring that up to date. The liabilities and deferred inflows chart on the right. I mean, basically what this is showing you is that MTA HQ and Bridges and Tunnels are our debt issuers, which basically shows why they have so much of the liabilities relative. And Transit's biggest piece is the OPEB liability. Just capital assets, a little bit of a donut chart here. You'll see what I just want to point out. One thing here is on the capital assets, the 28% on the far right, which is construction and work in progress. Half of that pertains to the East Side Access asset, roughly half, which, I'll call it, was it Grand Central Madison Concourse prospectively, which we anticipate capitalizing this year. So that'll be pushed down to the other asset categories. So that's why that's percentage-wise pretty large. And then the other liabilities, again, most of that is long-term debt of 45%. And then the other big components of that are the OPEB, pensions, and claims. But I thought that when you look at it on a chart, it looks a little bit differently than when you're looking at it. And I like the breakdown between the agencies. The income statement, I'm sorry, this is the cash flow. The only thing I wanted to highlight here on the cash flow was, sorry, I got the wrong page. Two things. You'll see that couple things. You'll see that the operating revenues increased, somewhat, based upon increased ridership. Uh, The one thing you want to see is subsidies and tax revenues. That increase, primarily that's just higher New York State supported subsidies, which is really driving that. That's the, payroll mobility tax, the petroleum business tax, internet sales, and some of the other state subsidies. Nothing real other than you'll see that the interest expense slightly higher, but nothing real, out of the ordinary to report. Now, also understand that the Carissa revenue is also based upon expenses from September of 20, reclaiming through April of 21, and that'll come back up,
Yeah,
even though it was all captured in 20.
yeah, if I can jump in, just to think about all the federal money, when we actually receive the cash, it's booked as revenue, so either you'll see, timing mismatch. One reason why I see a big increase in net position could be the timing of receiving the federal money versus the expenses and versus, when it gets spent, and that'll be true, with ARPA, so it shouldn't be confused as some big surplus. It's, pulling money in that will, we spend over time.
Yeah, it sort of shows itself on the surplus before capital grant and appropriation. If you see the 560, it looks like, we're showing positive, but a lot of that is recapture of costs from prior year. Now, hopefully I've got myself in the right page now. Apologize for that before. The one item I just want to show up on the cash flow here is on the 782, the end of year cash number. I just want to point out that if you just reference back to the beginning of the balance sheet, that 782 is really our operating cash and not our cash and investments. Okay, so that's, if you look back earlier, you'll see a big $14 billion, but this is just the operating cash. So I want to point that out.
Yeah, Jim, if I could just jump in. So this is not a measure of liquidity we have to meet, either, unforeseen events or just our kind of monthly cash flow. So we have, most of our liquidity is in the form of investments and so forth that don't show up here. So what we report to the rating agencies in the market is, liquidity is a, much bigger number.
And then just footnoted, the net cash from non-capital financing activities decreased 1.9 billion, and that's the timing of the Carissa funds, right? Most of the Carissa funds were received in 2022. And then the flip side of that is, the net cash from the financing activities is basically that's the grant anticipation notes when we issued those. So they sort of offset each other. I just listed the 17 footnotes that accompany the financial statements, just to kind of give you a little scale of how many there are and how significant they are. I don't want to highlight and go through them. They're all going to be in the audit report, but, there's a lot of technical footnotes, the employee benefits, the other post-employment benefits, the lease transactions, and the hedge footnotes are very technical and complicated. And so we want to give credit to the folks who do the work and our colleagues at Deloitte to help us be in compliance with those disclosures. So that's my story, and I'm sticking with it today. If there's any questions, I'd be glad to.
That was very good, Jim. Thank you. Do we have any more questions? Okay. Next, then, we'll have Jill Strohmeyer and representatives from Deloitte, the MTA's public accounting firm, to present the results of their review of the 2021 MTA consolidated year-end financial statements. The financial statements will be issued in final form after the Audit Committee review and approval. Jill Strohmeyer, Managing Director, will give the presentation. Jill?
Great, thank you. Before I start, I just want to introduce my team if I could. To my right, I have Costas Makrakis, who is a managing director signing a number of the agency audit reports this year. To his right, John Hughes, senior manager. Then Darshan Patel, our senior manager and our single audit compliance specialist. And then last but not least, Mike Tartaglia, who is also one of our managers on the engagement. So we have performed our audits of the financial statements of the MTA and all of the MTA's agencies. We perform those audits in accordance with two sets of standards, the standards issued by the AICPA and then standards issued under government auditing standards. And we expect to issue our reports on those financial statements at the end of this week, so May 27th. Our responsibility under the auditing standards is to express an opinion on each of the opinion units of the MTA and its agencies to make certain that the financial statements are presented fairly in accordance with generally accepted accounting principles. And I do want to point out that the material I'm going over is in this packet that we laid on front of your desk prior to the meetings. The MTA's significant accounting policies are set forth in Note 2 to the financial statements for the MTA as well as the agencies. We are not aware of any significant changes in previously adopted accounting policies or their application during 2021. I do want to highlight that, as Jim mentioned, next year GASB 87 on lease implementation will be effective for the MTA. And so you'll see that change next year in the 2022 financial statements. There were no uncorrected misstatements or disclosure items passed as a result of our audit procedures as it relates to the consolidation, FEMTAC, Long Island Railroad, MTA Bus Company, Transit Authority, or CERTOA. As it relates to TBTA, during our testing of accrued expenses, we did test the balance using a statistical sampling technique, and we did note one error in that sample. The known error was $887,000, so relatively small. However, we do need to project that over the entire account balance. When you project that mathematically, there was a potential overstatement of $6.3 million in capital assets and $6.1 million on operating expenses. We have discussed these potential items with management, and management does deem them to be immaterial to TBTA's overall financial statements. As it relates to Metro-North Commuter Railroad, we tested materials and supplies inventory, again using a statistical sampling technique. It was really during our count procedures of the materials and supplies at various warehouse locations. We noted one error of $2,500. Again, it extrapolates to something larger, which I have to report to you. It extrapolates to $5.3 million of potential understatement of material and supplies. Again, we've talked to Metro-North management, and management deems it to be immaterial to Metro-North's financial statements. There were no material corrected misstatements that were brought to the attention of management as a result of our audit procedures. We did not have any disagreements with management related to matters that are material to the 2021 financial statements. In our judgment, we received the full cooperation of MTA management and staff and had unrestricted access to the MTA and the related agency's senior management throughout the performance of our audits. At the back of this rather lengthy document, there's an Appendix C, which we title Management Representations. I'm required to share those representations with the Audit Committee. There is one letter for each agency, and each agency will need to sign this letter prior to the issuance of our reports on Friday. I would say that those letters are generally aligning with last year, so few modifications, usually just descriptions, nomenclature, things of that nature. We have evaluated the MTA's accounting and disclosure of related party transactions, and based on our evaluation, we believe the MTA has properly disclosed and recorded all intercompany transactions within the financial statements. Within our auditor's report, there will be a couple of emphasis of matter paragraphs. These are the same emphasis of matter paragraphs that were in prior years. It just calls the reader's attention to the fact that the agencies and the MTA rely on subsidies and funding from other sources, such as the FTA, the city, and the state. It's still a clean opinion. It's not a modification of our opinion. It's just something that we're highlighting to the readers. And lastly, in Appendix A, we do highlight just 3 of the significant accounting estimates that are within these financial statements, and we do audit. They relate to pension benefits, OPEB benefits, and claims liability. But they're in Appendix A for your reading at a future time. And with that, that concludes my prepared remarks on the results of our audit. Be happy to answer any questions.
Just a minor one. Is there a management letter that's going to come to the audit committee?
Yes, I believe that's on the agenda for July.
Okay.
I do not have any significant deficiencies or material weaknesses to report to you.
Things that we should be looking at.
Yeah, that, I believe it's July.
Okay. Any other questions? Thank you, Jill. I'll make a motion to accept the 2021 year-end financial statements. Do I have a second? All in favor? Aye. The MTA 2021 year-end financial statements are approved. Continuing with Deloitte, we will have the review of MTA's compliance with the guidelines governing investment practices. Jill?
Before we jump to that, can I just make one more final statement?
Sure.
Just so the committee knows, GASB 87, which will have to be implemented for this year, it's really a huge undertaking because we essentially have to go through, I think you said 5,000, every single contract that has any payments one way or the other, work with procurement and legal and the agencies and try to, get the details of each one, quantify them, and then, add them up and put them on the balance sheet as an asset and liability. I mention it just because it's, it's something we should get progress reports throughout the year because it's, given the tight resources, it's just a huge amount of work that everyone's got to do.
Right. Have we estimated additional costs that this is going to get it done? How material is this going to be in terms of unexpected expense?
Am I on? Right now, it's most of the labor is internal.
Okay.
Okay. And they appreciate it. But there is some costs for IT costs where we're using Yardi software. We use Yardi software currently with the
Right.
real estate folks. There is some addition. I mean, it's not material.
It's
at
not
this
material.
moment.
Okay.
Most of this is, as Kevin said, is deep dives into the detail. And then, once you hit the detail, then you're going to, maybe change in process and things like that. And we're working through those as, we had we had the pandemic, right? We had some key people who retired at the same time as well. So we're trying to work through some of that as well.
So there's actually a working group that is working on the project. I had 3 auditors that assisted them. They went through all the procurements. So there were like 500 procurements, and they went through and got the terms for them. So that was a help to the accounting people. But we will be, just like Kevin said, we'll be keeping track of that, and that working group is going to continue to meet, and we'll monitor progress.
Go ahead, Jill. Thank you.
All right. So in the committee book, there is what we refer to as an investment compliance report. It's essentially a negative assurance report that Deloitte will issue again this Friday, May 27th. Essentially, what this is saying is that during our audit work related to investment transaction testing, we did not identify any instances where the MTA entered into a purchase transaction for investments that was outside of the guidelines issued by the state of New York. So it's a clean report.
You finished, Jill?
Yes, I'm finished. Any questions? Be happy to answer those.
Okay, then I'll make a motion to accept the investment compliance report. Second? All in favor? Aye. The investment compliance report is approved. Moving on, we have Lamont Kearse, the Chief Compliance Officer. Lamont is here with the agency internal control officers to provide a quarterly report on the status of open and past due audit recommendations previously accepted by the agencies. Lamont?
Yes, thank you very much. Several years ago, this committee asked compliance to monitor and report on recommendations and remediation plans that were issued by audit services and compliance. This is a very quick presentation on the current status of those. Oh, wow, this is very small, hopefully. Okay, so this first slide is just kind of demonstrating the fact that the departments, the agencies are actively closing these remediation plans. Last quarter, there were, I believe, 92 that were closed by the department. So it's an active, ongoing process. So I think it's very important to kind of lay that out as soon as I can to you. For this quarter, again, we're actively working with the departments and the agencies to close the various remediation plans. As of right now, we are at 25 for this current quarter. The next slide breaks down what we're calling remediation plans implemented, awaiting closure. I think it's important to understand that the process that's involved here, there's two parts to it that are fundamental to understand. One, the departments, the agencies, they come to us and they say, we've done what we're supposed to do, we have implemented it. Unfortunately, what we say to them, great, we trust you, we believe you, but what's that old saying? You got to verify, right? So at this point, there are about 103 remediation plans that have been submitted to either compliance or audit with the assurance that it's been done. And we're saying, well, now you have to prove it. Show us the documentation, show us the proof. You know, we feel this is a very important process because historically in the past, things have been done, but you could never find the proof, the documentation, people would leave, and there was no central place to find that. When we rolled out this new process, the new technology, we now have a central place where all this information is stored. And when Michelle and I, leave the MTA and we're sitting on a beach in Florida someplace, you will not have to call us to find out what happened in the past, okay? Oh, we're not allowed to ever leave? Okay. So there are 103 pending right now, and hopefully, as we review them, we'll be able to close those out. The next slide breaks down the ones that are 6 months past due. We break them down by priorities established, basically between a dialogue between compliance and the various departments and agencies to figure out, which things are the most important, which things need to be worked on the soonest. I'm going to focus on the ones that are listed as high. There are about 43 of them. The next slide, I break them down by business, right? Just to give you an idea, there's 43 spread out among various agencies, among various departments. Right now, you'll see that there is a concentration of quite a few, about 10, in C&D in the delivery area, and there are quite a few, about 7, in IT infrastructure and operations. Now, I think it's important to understand that what's, I think, influencing the ability to close some of these are two, I think, very significant factors. One, transformation, right? So a lot of the things you'll see in C&D were not in C&D prior to transformation. They were in other agencies, other departments. So as we've been moving things around, these remediation plans from different agencies, different departments, we're finding new homes for them. And you have to give individuals an opportunity to get up to speed to figure out what happened. And again, prior to the system, there was no repository, so they're having to figure out where things stand. The other, I think you've heard it from others here as well, staffing. Staffing is a significant issue, both The individuals that were responsible for some of these remediation plans are no longer with the authority, and others are now having to get up to speed about where things stand. And also, going through and providing proof, which we want, is time-consuming, and it will take away from other things that they are having to do. So we're also running into that issue as well. But you've got looking at 43 over a very broad spectrum of the organization. So I think, that's important. Again, remembering, we're not saying these things haven't been done. We're just saying we don't have proof that they've been done at this point. And that wraps up my presentation. If I have any questions, I'll be happy to answer them.
Okay. No, thank you, Lamont. Any, no questions? Okay. So, or for the agency internal control offices, no one? You're good? I'm good. We have one final topic for discussion. I'll make a motion to convene an executive session to discuss proposed pending or current litigation in accordance with New York State Public Officers Law 105.1D. Do you have a second? All in favor?
Aye.
Okay, we will now move to executive session. Thank you.
Okay. We're going to do it in here, or what? How are we going to do this?
While in executive session, the committee discussed items related to proposed, pending, or current litigation. The session was for informational purpose only, and no action is required by the committee. May I have a motion to adjourn? And I will second. All in favor? Aye. The meeting is adjourned. Thank you very much.
Thank you.